Hello, Warriors team. Ingmar, AJ, Simon. Hiya, Michael. Happy Easter to you too, Simon. Happy Passover to those that are celebrating it. And I believe as traders, we all have our own Exodus journey where we're attempting to break away from some type of slavery, something we depend on. Maybe it's a job, maybe it's a career that you're tired of, and in our lives. And then we wander in the desert looking for answers. And you know where you are right now, everybody? You found an oasis in the desert at ForexAnalytix. Who agrees with me? Is this an oasis compared to being in the sand dunes with someone who, you know, promotes with his Bentley on his way to his private jet? Okay. So when you find an oasis and you drink the water when you're thirsty, make sure you don't drink all the water. Save it for other travelers in the industry, okay? So, you know, like Blake was saying on Skype earlier, already feels like we're in holiday mode. Came in, you know, we are digging in, trying to dig in a higher low in yen while the dollar made new lows. So,
hello, Dale. Hello, everybody.
How are you?
Yeah, very good. Thank you.
Tell us what you already said on the Flow Show.
No, I'm first of all, I'm going to comment on your Oasis lines. I always say like save water, drink wine. So my Oasis is in my wine cellar.
Okay. Yeah. You turn water into wine too?
No.
Okay. What's your favorite wine?
Oh, I'm absolutely not a racist in when it comes to wines. I like a lot of them.
Okay. All right. And do you like, do you drink, say a bottle a day?
No, actually,
Two.
I'm
I didn't ask you, Steve.
never on, actually not on weekdays.
Okay.
But
All
in the
right.
weekend, I may sin.
Okay. All right. So, you know, I was just want to show you guys this, and then we could cover some FX. You know, there's been no reaction out of China, right? So far for the visit. And
No,
there were stories of, you know, Tim Cook, I think, was over there and they're worried about things. I just want you to check out the Apple Weekly. Okay, so that's where we went to. I heard Cook was selling a lot of Apple over the last week or so. So, you know, I'm considering shorting Apple, you know, risk reward wise. I, you know where I'm wrong or where I want to get out of the way. I'd like to see a rally in the S&Ps and see what Apple does. But what was interesting about yesterday is it actually kind of gapped lower yesterday. Okay. There's no real clean divergence, but when, again, let me just take you back to this. If we do fail, you could say that Apple has a huge descending triangle up here. All right. There was that false breakdown that I was turning real bearish Apple back then. But you know, that measures $80, which happens to be the COVID, pre-COVID high. So, you know, it's a long way from here to here and it could break out. But, you know, if China wants to hurt us, they know us here in the US value more than anything else is money. Okay. They want to hurt us.
Is it different in other places of the world?
I'd say that we're the most materialistic country in the world. That people live with less in other countries.
Yeah, that is true, but you know, money is power anywhere in the world.
Yeah. Okay. Well, I don't think they're out to, hurt Greece or Spain, but adversarially with the U.S., I just don't think they're going to do nothing after that. You even had newscasters, liberal ones, laughing that they called it a transit stop instead of what it was an official meeting about arms. And then they came out afterwards and talked about the arms, that they should speed up the defense package to Taiwan. I just don't know how many times you could poke a tiger in the eye. So Apple might be a good short up here, just something I'm looking at. Thought I'd share it with you guys. So what's your takeaway going into tomorrow? Kman, we'll come back to you.
It's going to be, well, on the one hand, very interesting. On the other hand, zero liquidity. But the jobs data or the employment data that we saw so far this week in the US really show a softening or weakening. And also the challenger job cuts coming out was higher. What was to be expected, of course, with the people with the companies laying off. But there are signs that this may be the month where the NFP starts to slow as well. And after what we've seen so far, and then some warnings. One big bank warned that today's claims may see a jump as well. It would be coming as a surprise trade or a surprise if tomorrow's NFP would beat actually. So to me, if it really slows down, then we are going to have to reevaluate. I think the US dollar and the all the classes really, because we are on big support in the yields. We are trying to figure out what to do with the equities and trying to figure out what we are going to do with the dollar. Yen is approaching dangerous levels, mid 130s, and yeah, cable is trading on highs. Euro dollar is trying to figure out whether to break a 110 or not. It's going to be it could be a very hot Easter weekend for the dollar. I personally
look at Deere. This is a big company. Look at Deere in a week. Why would Deere do that? I mean, it wasn't earnings. Could it be China? Could CAT be China? I mean, are these people already worried about whether or not China's going to, continue to buy American stuff?
Now they are trying to chat up Europe, right? Macron and von der Leyen are in China. Yeah. And it seems that Airbus already got like a new order for, I don't know how much it was, 164 planes or so, which is pretty big.
Semiconductors led the way. I don't know. I mean, I've seen counts where we're going to take out this week's highs. So, we'll see.
It's going to take, let's put it that way. It's going to take a good jobs report tomorrow to turn the ship around.
Okay. And the TLT, I don't know. It should be a little higher, but I think this is going to be a big event if we get a breakout in TLT. So that's
hey guys, good morning. I don't know if you saw. Hey, good morning, really quick, and happy almost Good Friday. I don't know if you see the futures have just turned lower. The Economic Council's president, I believe it's von der Leyen.
Von der Leyen.
Yeah, it wasn't he part of the ECB at one point?
No.
She
was not.
No.
Okay, I don't. Okay, anyway, the comments just came out that she says we must address significant disparities in our relationship with China, and I don't know if that's what just hit the market, but man,
it came off, Blake.
It came off pretty aggressively, just like literally over the last few minutes. I just wanted to raise your attention to that. And plus, I mean, things are getting a little illiquid right now, obviously before the holiday. And I mean, everybody is like on on Easter weekend, like vacation already mode, I think. So things are just going to get a little bit more wild when headlines hit. And I don't know if that's what moved the market, but and so anyway, I'll let you guys continue. I just wanted to bring that up really fast. Sorry.
Aussie, the weakest.
Do we forgive him, guys?
No, yeah, sure. Aussie, doesn't this look like a bear flag, guys? In Aussie, off this straight
Yes.
line break.
Yes, it totally doesn't. We're at support.
Yeah,
We were showing that yesterday on the morning edge as well.
I don't know. You know, it measures deeper than where I'm looking
Yep.
to buy it down at around 60.
Any way you look at it,
Thing.
the rebound has corrective characteristics. We can all agree on
Yeah.
that, right? You can see
Yeah.
the price action. It's choppy, it's overlapping, right? It's slow.
So CAD, that's some support here. Hard to have a lot of conviction, and then copper's rallied back to the breakdown. Could it be another false breakdown that I've gotten, you know, bearish about Mr. Copper? This kind of looks weaker. So we rallied right back here. We'll see what I think copper's a sell on this bounce. Who else is around? Stel, any comments on metals? And they're still acting pretty stiff.
Markets are not doing that much today. The one thing that I'm looking at quite intently now is the 10-year US, and the yield is basically about to break down. Now, I think tomorrow is going to be the big event, but markets are going to be closed. But we are at really, really important support now to the pip, basically, in 10-year. Regarding metals, well, don't really have that much to say ahead of tomorrow. It is, you know, if you're a bull, it is encouraging that they are having a couple of like dojis and basically indecision days after a pretty good leg higher 2 days ago. So, you know, we spiked up and we're now seem to be consolidating. Having said all that, I think sentiment positioning, it is definitely on the long side. So a pullback is possible. But I tell you what, if tomorrow's number is not strong, if it's weak, even slightly weak, I think overall the employment data of this week will have been weak. I keep saying weak, don't I? Of this week has been weak, but yeah, let's look at the jobless claims today. The picture in employment in the US is looking like it's changing to the for the worse. If that happens, that's definitely going to be a
although it's a little bit premature. I mean, you know, but overall, it's not very surprising either. I mean, given, you know, the fact that we know that the change of monetary policy is something that takes time to show up, right? Changes in monetary policy, oppositely from what many people perceive, other than changing the sentiment, which they can change almost immediately, and expectations for the future, but having to do with real economic data, they take some time, right?
Yes.
So that's not big of a surprise.
Yeah.
Ever see Bitcoin this compressed, moving sideways for such a long time?
It's surprising, but you know, if you scroll out a little bit, it just looks, to me at least, it looks like a bullish consolidation. You know, we're off the highs, but this seems to be, after this impulsive move from below 20K to 28, it seems to be consolidating for the next move up. So it will depend on risk. We get risk on, I think this is going to fly. Absolutely.
Okay. A quick look at the grain market. There's wheat. There's corn.
Take a look at sugar. Miss Schneider has been talking about sugar as how
a year.
Yeah, how so how it's a good proxy
Inflation,
to inflation. Yeah, check that out. It's always has been.
Do you know what the symbol is for sugar? SB, it used to be.
Hold on. Let me check. There are futures, right? SB, yeah. SB1 exclamation mark is the front future. And so SB1 exclamation mark. Ah, no, click on
actually,
all.
you're in
Click on all.
stocks.
Click
You're
on
in
all.
stocks. Go to
Go to
You have to
all.
click on all.
There you go. Go at the bottom of the page. Bottom
Okay.
of the page, sugar futures. Click on the.
SB,
Click on
yeah,
there.
you go.
Got it. All right, 2310.
No, you're still there. Oh yeah,
No,
okay. Go on.
here it is.
Just
Yeah.
scroll back and see how that's been doing over the past couple of years.
Well, that's just a 4-hour. Could look at it
Approaching
daily.
the 2016 high at 24 again.
Yeah.
God, I remember
And it's just
5-cent sugar.
And by the way, we're
Stuff
about
down
15
here,
minutes
see?
from Canadian jobs report, by the way.
Right here.
Which tends to be a very volatile numbers. People should keep in mind.
Okay. Sugar. Do. Honey.
I was just thinking about the same.
You are my candy
There's a stock
girl.
for every occasion.
Bubble gum, little bubble gum on Thursday.
Dale, I'm
okay.
looking for a sugar daddy. Are you interested?
Oh man.
Not for you. But I'm open. Anyway, here's Charles Schwab. Do you think that
Wow.
that SIPC is kind of like FDIC, insurance for stock accounts? You think these brokers also are in danger of having some problems? I actually saw something that the IMF was talking about the shadow banking system today, and they're worried about it, which reminded me of Harold Malmgren, who put out a piece about the shadow banking system. So, I mean, there are all kinds of things lurking in the plumbing, isn't there, with what's happened with rates? And I was thinking about this. All right,
There
let's
have
look at,
been a lot of things
yeah,
that are, as we've been saying, right? We've been
Yeah.
hiding a lot of garbage under the carpet for the past 15 years. So if you're asking if there are any vulnerable parts of the system, the answer is plenty.
yeah. I was thinking about this, SVB, their, terrible position they had being long bonds when yield 10-year was 1.6 or 2%, and having big principal losses. I have to think that there are plenty of negative interest rate bonds on European banks books, and they're not only taking hits in principal, they have to they have a carrying charge of carrying that because it was negative interest rate, so they actually have to pay to hold a losing position. Is that what could be going on that no one's even talking about? They have to be in the same position. They were pushed out on the risk curve during Fed QE and everything. So that's even worse, that you're not getting any yield and you're actually paying for a losing position like that. Don't you think? Anyone own any Greek bonds or anything when we were at negative interest rates? All of that paper. I mean, how come we don't hear about that?
Yeah, when do they have to get out of that? I mean, there's so much that's underperforming right now because of
Yeah.
where rates are at, just like universally across the board.
Yeah.
I mean, that it's all got to surface it's all got to come to the surface. And I think, Steve, you're exactly right. There's been so much pushed under the rug for the last, 10 years that that it's all going to start to surface, all that floating junk. Hey, by the way, there's a headline that I just saw a tweet from Zero Hedge that said, President Xi is ready to call Ukraine's Zelensky. We'll choose his moment. and that comes from a French diplomatic source because I think there's some comments coming out from Macron as
Tell him
well.
what, though, is the question.
Well, that's the thing, right? I mean, if Xi is calling Zelensky, isn't that going to be like, I mean, I don't know. I mean, isn't that like kind of like I would assume it's going to try to, you know, negotiate some sort of, you know, something between
Ceasefire?
Russia and like some sort of ceasefire or something, or maybe even, you know, pick a side, which, you know,
I'm afraid, Blake, I mean, I have no insight,
but yeah,
obviously,
none of us do, right?
direct insight in the, you know, in the military operations and everything else, obviously, but just plain logic here, right? There has been so much investment in sustaining this conflict on one side from Russia, on the other side from the whole West, more or less, right? That I can't envision some kind of a deal that will be acceptable from both sides, because Ukraine, having the backing of literally the whole West, has no reason to accept losing probably a very decent part of its territory. Putin has taken this personal, and it's obviously that it's obvious that it's his personal bet, and you know, whatever he's looking to gain, he you know, he's ready to you know, take the cost and, you know, stay on it. So I really don't see any way out of this anytime soon.
Yeah, and there's a bunch of comments that have come through the live squawk. You can see it right here on ForexAnalytix. They want to, you know, he says it's not Z says it's not his war, so it looks like he's not gonna, you know, probably intervene there. Anyway, hey, we and thanks, Steve, for your comments. We have about 8 minutes before the Canadian jobs report. Let's talk a little bit about this, and I wanted to ask Stelios, Kman, did you guys talk about this at all ahead of, or, you know, on the flow show? I know you guys are probably limited in what the heck you could talk about because it's the day before a long holiday weekend, but do you guys mention it at all?
Yeah, I mentioned it that we had the report out. There's also a bit of option interest right in the mid 134s that could play a little bit of a role. But yeah, for the rest, and it's been a bit volatile. The latest reports have been on the balance good in Canada. So it's really an open question about what's going to happen now. I mean, it's a real lottery, right? But then I didn't specifically talk about dollar CAD levels, so be my guest.
All right. Well, and thank you. And no, I appreciate that. And
on this,
go ahead. I'm sorry. What were you saying?
Yeah, on this G comment, he already said so after his meeting with Putin that he was going to contact Zelensky. And now that Macron is over there, he's of course pushing him. So these are French diplomatic sources saying that. Xi already said that he would call him. He was just not sure when. So I'm not going to read too much into it. And as we can see in the market, risk is not reading much into it either. So it should be risk positive, but nothing is actually reacting to it.
Okay. All right. Thank you very much. And I appreciate that and the insights there. And as far as the dollar CAD goes, you know, technically, I want to say that first of all, we're in the middle of probably a really big range. You can see it like very long-term range. One of the things that sent the dollar Canadian lower was the move higher in crude oil. You can see that was really what we would say is a flag or the pennant of it. The thing is obviously this is a surprise, you know, when you get this data. The market's looking for 12,000 jobs, I guess. So if you look right over here, you know, the market's going to be expecting 12,000 jobs to be created. I think the U.S. population is 8 times, or is it 9 times, something like that, greater than Canada. So you have to imagine this is like, you know, the U.S. creating 100,000 jobs, roughly, something like that. and then you can extrapolate it the other way around too, if when Canada loses jobs. But the headline number is going to be pretty important. The fact is they continue to create jobs, but if we start to see a weakening picture there, that would suggest that the dollar CAD might get a little bit of upside. And one of the things I wanted to mention regarding that and why that's the risk today is, let's not forget that we had this big, huge move in crude over the weekend, and crude oil has been holding up very well above $79. So, a lot of traders bought Canadian dollars on the heel of the OPEC's move, or the OPEC move, excuse me. I just said OPEC's, I meant OPEC move. And so if we get a weak print today, I think the risk is that you start to see a move higher in the dollar CAD. But if, Canada's jobs numbers come in, above expectations, then we're just going to see a resumption of trend. I think if you start seeing some of these, intraday lows taken out, then you have a flag pattern that will probably take us back down towards 133.50, or as, Kman said, maybe down towards 134, where there's a lot of option activity. And we might, get a consolidation near the 134 level ahead of, tomorrow's jobs report, which only 4 or 5 of us are going to be around trading. I'm joking about that, but it's going to be a very thin market. We were also mentioning, and this is something that Kman just brought into the chat room here. He was just talking about this, and Kay, you said that your broker or your bookie is going to have the metals are closed tomorrow. I mean, I think all markets are closed, but FX tomorrow. And does anybody have any other information other than that?
So Gav just said that his broker said gold, silver spot closed tomorrow. So that's another one out of the window. So if you have positions, you can't even cover them.
Yeah. So you got to be really, really careful. I mean, I have just FX positions open and I have no dollar positions. So I'm really, going into this with, I have to just manage my open cross rates, which is fine. But you guys got to be really careful, because this is I cannot believe the BLS didn't do what Canada is doing. Anyway, but we're going to get to Canada here in just one second. Stelios, you brought up about the 10-year. This is the 30-year yield. Look at how we're starting to get a consolidation below the 200-day moving average, and also near really critical support. I know you were talking about how the 10-year was really a key support. By the way, this is just our chat room. This is our general chat room. I posted a bunch of charts this morning, and you guys, Dale, you talked about Bitcoin. There's that bullish wedge that was posted in about Bitcoin this morning as well. You can see a nice bullish wedge in Bitcoin, but that 10-year is getting real close to support. And so, or it's trying to break down, or it's like right at the tick, as you pointed out, Stel, and 30-year looks pretty vulnerable too, right?
Yeah, the 10 years is there now.
Yeah, right there.
Well, let's see. We have data in a minute and a half. We also have jobless claims from the US, so let's not forget about that.
Yeah, how about if we get a healthy jump in jobless claims, like a 25-30% jump, and we go from 200,000 to like 240, 250 unexpectedly. That's gonna move the market today. I don't want to dismiss that either. So
Goldman Sachs wrote, they said today there's a good chance of a high number. They said that.
Oh, that's right. Kman, you did post that in the chat room a little earlier too. I think that's scary. Anyway, let's I think we're getting into very scary territory for data, and we've been really bullish on US data for all of this, earlier this year, just telling people that you can't really expect the US economy to weaken too early on. We've all been in that camp this 2023, but I'm kind of reversing course here. So I'm a little bit more worried about that. So here's the initial jobless claims. Watch that number. This is via data flash on ForexAnalytix. And then you can see the Canadian employment numbers right here, just a little bit below that. So that data is coming out. It's worth saying
we have IV PMI, Canadian PMI in an hour and a half as well, just for good measure.
Thank you. And that data will be out in just a few moments. Probably need to keep an eye on the Canadian yen too. Anyway, we'll go take a look at that in a moment.
Okay, let's see. Oh, Canadian's good. Slightly
Strong
better.
data. Gosh dang, that's gonna put us right back down. towards
Remember,
135.
right? Canadian data, we've said that a billion times, tends to be very, very volatile.
Continuing
at the
jobless
jobless
claims is
claims.
higher. Yeah, and initial jobless claims as well. So it's
Not 240, but we're gonna be at
upward revisions too of the
ooh,
previous.
that's not good. Look at that upward revision, Stel. Oh, that's I
Yeah,
mean,
it's not good.
that's not good. And
Yeah, a couple of numbers don't make a trend, but it doesn't look good for now.
no, and especially with jobs tomorrow. I mean, you got to think about what people are going to do today ahead of tomorrow because nothing's open but FX. FX is
Mhm.
going to be the responder, and like everybody's going to look at that data and go, "Shit, I can't do anything."
And expect that everything else might open with big gaps
Right? Exactly.
next week, right?
Yeah. So I'm going to be real, and one of the things I brought up on the trade-off last night on the Pepperstone show, you guys don't forget that the dollar index is not very far from its trend lows here, 2023 lows. How about if the data comes in really bad tomorrow? How about if we only create 50,000 jobs and we're expected to create over 200,000 jobs, or heaven forbid we come in with a negative print? The market has nowhere to go, nowhere to hedge but the dollar. And you could see some pretty massive volatility. And I would think that we could even get a situation where you get a really big move in the dollar down just through support and maybe even a bounce, because I personally would be buying dollars on a big dip, because the market will start to they'll start to think risk aversion, bad data, bad for stocks. Dollar gets bought up in that situation. So if you get a really big move in the dollar tomorrow, like let's say the euro punches well above 110, I might actually sell into it. But we'll be, guess what? We're going to
I think the long dollar thesis, Blake, is not such straightforward as it used to be in the past.
That's because people don't have the confidence that the Fed's going to pivot or not.
Yeah.
And I don't think they will. And when they find out that the Fed won't, that's when the dollar goes back into that, reverts back to that situation. But look, we're bleeding into Dale's interview time. I just want to let everybody know here, we will be here live tomorrow. Dale, I know it's Good Friday and it's a holiday, and I know you don't have an interview. You're more than welcome to take tomorrow off, but we'll be here for all of you that want to cover.
Just yesterday you said we weren't going to do it. And
I know, and we thought about it, and it's like jobs, look, I'll be here, and if you want to do an interview, that's great. But I'll be here.
I rescheduled it on yesterday's information.
Yeah. Hey, man. I like I said, this is like a last minute thing, but I'm going to be here tomorrow. The rest of you guys might be off, and it might just be me and like 3 or 4 listeners. But
no. You can count me in as well, Blake.
Ah, damn it! I was really hoping to do this on my own.
I know.
I'll be around for the data, but I'll be quiet. Promise.
Well, we all the company here, the better. The more company, the better. But I just want to say that I want to let our viewers know that we decided, and I decided late yesterday or yesterday afternoon, I'm going to be here tomorrow for the jobs report, even though it's a holiday. So we'll be covering it live. So it should be mayhem and a little crazy. Nothing like starting my holiday with a little bit of a heart attack, right? That's right. So.
Can you please promote Kevin Arajo for me, please? It's not letting me, seems like Zoom is not letting me do that anymore.
Steve, you got that?
Tell me again the name, Dale.
Kevin, Araujo. Someone's locking me out, man.
And in the meantime, while Steve is doing that, make sure you guys check out the Trader Funding Program, because if you want to trade our money, or you just don't want to risk your own money.
Dale, I've done it, but he also needs to accept. Just letting you know.
All right, he has.
All right, there you go. All right, guys. We'll see you tomorrow. Have a great one. Dale, have a great interview.
Yeah,
thanks, team.
Hi, Kevin. How are you, buddy? Kevin? Waiting to hear you.
Unmute. Can you hear me now, Dale?
Got you, buddy.
Okay. Hey, how's it going, man?
Good, Kevin. So you know, we're going to be shutting down for the employment number, and love your takes on commitment of traders. What are you seeing, and do you want to share your screen with us now?
Sure. Share screen. Let's see. All right. And screen.
So
Two.
Kevin's analysis is very heavily weighted on what he's seen in commitment of traders. So, okay, tell us what you're seeing technically and how it ties in with the commercials, large specs, small specs, etc.
All right. What market do you want to cover?
Whatever's on your radar, just
Whatever's on my
go.
radar. You
Yeah.
could see my trading view screen right now, Dale.
Yeah, got it.
Awesome. All right.
Someone's saying your last name is Portuguese.
Arujo. Yeah.
Yeah,
Arujo.
okay. Arujo. Okay.
Yes, sir. Okay, so we've been tracking the CFTC report for quite some time now. We've been looking at how the banks move price on the charts based on their positions. And so we've been tracking whether they are what we call creating cycles, accumulating within a cycle, or distributing within a cycle. So what we can see when we look at the CFTC data is we can see the banks accumulating a long position or short, and then distributing that long position or short position. And so we've been tracking what they've been doing on the S&P 500, on the NASDAQ, and on the Dow Jones. And what we've seen recently is they were in what we call a bearish cycle, meaning they were accumulating short positions up until this area. So to visually make things a little bit easier to track the CFTC data and what the institutions are doing with it, I drew this red area around price action. The light red means they're in a bearish cycle, meaning they're focused on accumulating a position. When I have a darker red area shaded over the candlesticks, that means they're very aggressive with their positions. All right. So after many, many years of tracking the CFTC data, what I've also found is that when the banks are accumulating a position, they usually reach a ceiling point where they don't accumulate more than that specific size of a position. Now, over multiple years, 10 years, 15 years, they tend to break through that ceiling and create new limits, but they usually stick within those confines. And so when they come up to these maximum numbers that historically they've reached, and when they reach these points, they start taking profits. That's where I draw this darker red shaded area. And so what tends to happen, as you can see, when price reaches these maximum points, they take profits, and it causes a shift in the markets. So as you can see here, they were accumulating short positions, okay, and then they were really aggressively short here, and then as price drops, they close their positions. And the same thing here, aggressively short, and then price drops as they close their positions. So what's happened lately is if you take a look at my candles here, I don't have it colored. Why? Is because when I look at their positions, shorts and longs, they're not significant enough to be classifying this as a bearish cycle anymore. Okay, so when you look at long positions, you can see the coloration of the cells here are blue. I've coded these cells so that when positions are aggressive historically, based on historical figures, when they get more aggressive, the cells turn red. When they get non-aggressive, they turn blue. So the way that I like to look at it is if it's blue, it's cooled off. If it's red, it's aggressive. So as you can see back in January and February with the SPY, they were somewhat aggressive, and just recently they become less so. So at this point, there's no clear direction based on the positions of the institutions, whether or not they are thinking about accumulating a strong long position or a short position. Technically, when we're looking at the technical charts, what we can see is that the institutions created a selling area up here on the SPY between 43.71 and 46.36. This was the last area on the monthly chart where the banks came in with significant selling to push the markets down to these areas here, 34.96. Now, the reason why price is reacting here is we have an institutional buying zone here. So this was a significant area where the banks were buying high enough to put price up to here in the 48s. So price has now come down, contacted this area. So technically we're in a range on a higher time frame. So price can rally from demand up to supply, dropped from supply down to demand, and price will not be able to go anywhere unless one of these areas are taken out, either demand or supply. So it kind of leads us to wonder, at this point, what direction price is going to be heading in. The last thing that was contacted was an institutional demand zone. So that leads me to suspect that likely we're going to see a little bit more upside in the medium term.
Okay, anything that you're following that is giving you a clearer signal than this? So I'm going to take this as neutral with a little bit of an upward bias still.
Yeah,
So
I would think the
okay.
same way too.
All right, that's a boring newspaper article.
Yeah. Well,
right.
something did very interesting happen recently in the NASDAQ. Okay. So Dale, when we look at the NASDAQ and we look at the monthly chart, the last area of supply that the banks created was this one here. Yeah. So price rallied up into this area, it dropped, and then it came back in, created this basing candle, and then rallied straight up and closed above. So that's a very bullish signal. And usually when they create a very bullish signal like that inside of a supply zone, it typically means they're going to push price higher. Okay. So in order to be able to determine whether or not that's going to happen with some higher degree of certainty, we look at the lower time frame charts. And so when we look at the lower time frame charts here, we can see that the banks broke this descending trend line. This is an area where a lot of retail traders were selling short the market because of the test of the trend line right here. So what the banks did is they came in with significant buying right here. This is a basing area. This is where the banks were accumulating a long position. They drove price up into the descending trend line where retail traders were selling. So the banks bought, caused price to come up, remove an institutional selling zone here. They retraced it back to that area, the original area where they were buying, and they've pushed price up into that selling area on the monthly chart. Now, when we go to the daily, here's something very interesting. We had a significant selling zone here. And what would have typically happened in a situation like this where we have a selling zone located within a higher time frame supply area is this selling area would be used to facilitate a move lower like this. But instead, what they did is they decided to remove that area with this candle right here. If you can zoom in right here, you'll see that there's a wick there that just penetrated through the top of this supply area. So in essence, what they're saying to us is that on the daily time frame, they're not interested in using this supply to facilitate a move lower. In fact, they're interested in removing it and creating some demand down here. So if price does come down here, what we're going to be watching for is for them to start buying, creating a momentum shift here and sending price back to the upside. So there are some indications from the NASDAQ that we're likely going to see a push higher. But again, when we look at the CFTC data, Dale, look at the short positions, you see they're somewhat red, but they're not nearly as aggressive as what they used to be. And longs are definitely not aggressive. So any bullish pressure that does appear in the SPY or NASDAQ at this very point is more because of them closing off of positions. All right. When you accumulate a long position, it tends to go up. When you distribute a long position, it tends to go down. Same thing with a short position. When you accumulate a short position, it tends to go down. When you distribute a short position, it tends to go up. And so you can see, you look at short positions, what have they been doing? 17, 15, 15, 13, 11. They're distributing a short position, which is causing this momentum to the upside. So I wish I could tell you that there's something very, very distinct that is giving us a strong indication of a particular movement in the markets. But because they're focused on distributing a short position right now, we're not getting anything very solid. So if I was
How
trading
about in
indexes-
gold? I know you cover gold. What do you get? Did the CFTC Commitment of Traders report forecast this huge rally we had?
Yes, absolutely. So if you take a look at the positions in gold, you'll see that recently they were short at highs of 117,000. They've been taking profits on those short positions. They're offloading those shorts. And what they've been doing recently is increasing their long positions, 215, 230, 237, and 245,000. When we look at the technicals, we can see that on the higher time frame charts here, 6-month and 12-month charts, we're in an uptrend. This is a clear uptrend, all right? We've had some basing over the last several months, and now we're making a move to the upside. And within that move to the upside, we have this very important weekly chart here, okay? So this was an institutional buying zone that we located. It was a buying zone because they used that area to remove this very significant selling area, okay? If I zoom out a little bit, let me show you the significance of this. All this price action that you're seeing here, this is all that ranging that we're looking at on the 6-month, okay? And so if you take a look at price action, there is no descending trend line here. And the only trend line that existed was this trend line to the upside, okay? So when price moved to the downside, right here is where a lot of retail traders were buying because of that ascending trend line. So what the banks had to do is they had to come in with so much aggressive selling to cause price to drop down here. When it got down here and retail traders started getting in short because they realized, oh, price is not going to be going up. Well, this is where they started entering into short positions. Banks came in, pushed price back up to that selling area right here, and they managed to drop price down to these areas. So on the way up, they created supply, they removed that supply, and then when they came back up, that very important, very significant area of supply that was used to cause price to go down, when they removed it, they created this very significant area of buying. So they caused price to rally up, drop back down to that buying area, and now we're seeing a push to the upside. So the thing is here, on the weekly chart, we have an ascending structure. Beautiful. Do we have an ascending trend line? Yes, we do. But the problem with this, Dale, at this point, is for us to have a really good, strong uptrend, it has to be backed up by an institutional buying zone. Okay, meaning we would want to see something around this area here that is telling us the banks have significant buying there. Now we know this big candlestick here is full of buying, and how do we know that? Because we can look at the CFTC data and we can see that they were adding long positions. But when they're adding long positions within a big momentum candle like this is not the same as adding long positions within basing like this. So if price was to retrace from these highs down to this area, the only thing it would come across is a trend line. And typically, when we look at price action and we're looking at what the banks are doing, when they drop price to trend lines, they typically do not use those trend lines to start buying again. It's usually retail traders that are looking at buying at the tested trend lines. So if price was to come down to this trend line here, it's very likely that it could break to the downside. So yes, do we see longer term gold heading higher? Yes, indeed we do. But once those structures get formed and we have demand to back it up on charts like the weekly, then we know that, you know, that move to the upside is going to happen fairly recently.
Okay. Anything that's kind of on the precipice of turning, what's your best idea going into, you know, the next month or so?
Well, you know, there's one very significant theme that's in play right now is the euro. You know, when we look at the positions on euro, we can see very clearly that they've been extremely aggressive with their long positions, okay, reaching as high as 240s.
Yeah.
And when we look at the historical data, we know that 266,000 was the max size of long positions the banks have ever held. And so when we reach 246 areas, we know that they are likely going to have to start taking profits on long positions. But the problem for the banks is that it's not so easy for them to just close off positions because they have such a large portfolio and billions of dollars in positions that they need to find people to take those long positions off of them. All right. So that's been what they've been working on recently. So 246, yes, we've seen some decline from 246 to 236 to 240.
So
and to
they're trying to
228.
distribute now their longs?
Yes. Yes. They're trying to find ways to lure retail traders into buying the euro right now, is what they're trying to do. So, so I've been tracking the sentiment on my FX book. I find that they've been very accurate with the positions of the retail traders. As you know, a lot of people, hundreds of thousands of people use my FX book to track their performance. So they have to connect their brokerage accounts with my FX book. And so what my FX book does is it tracks the positions that retail traders have in specific markets. So I'm bringing you a sample here. We have euro, pound, US dollar, Japanese yen, and so forth. So as you can see right now, most retail traders are short, okay? Most retail traders are short. And so I take little snapshots of the sentiment of retail traders and I place them on my chart because I want to follow along not only what the banks are doing, but because I know the banks need to create an incentive for retail traders to take on those long positions that the banks want to offload. Because once they reach a maximum, you can't buy anymore. It's like, you have a portfolio of $100,000. If you bought $100,000 in stock and it's rallied up quite significantly and you want to take profits because you can't buy anymore, well, you need to find somebody that's going to take those positions off of you. So, when you look at the big banks and you look at, who owns the major media corporations, CNBC and all these things, it's a big conglomeration of banks and very powerful people that have the control of what is posted on CNBC and all these news organizations. So it doesn't take much to have somebody come out and say, oh, the dollar's looking really strong or euro's looking very strong, whatever the case may be. But what I found, and I'm not a conspiracy theorist, but what I found over years and years and years of tracking what the banks are doing, what I found is that there's an incredible coincidence when we have a situation where the banks have a massive position, either short or long, and then economic data, news, different things just happen to come up that inspire retail traders to take those positions off of the banks. And so I'm telling you this now because you can keep an eye on the economic data that's about to come out tomorrow, and you can keep an eye on the headlines, and you'll see for yourself. I mean, we've done historical chart analysis where
so the
we've
banks
looked.
would love a weak number so they could unload some more longs.
Yeah, so to get them to buy, right, we need a weak dollar. So it's very likely that tomorrow is going to be a number that's going to make the dollar look weaker.
Yeah.
And right now they're in retail traders are in the process of already offloading their short positions and switching them to long positions. So we're already in that phase. So logically, I have to conclude that they're going to continue with this process. Now, they could stall this out a little bit longer. Sure, they could do that. They can come out with positive data for the dollar. And then retail traders start piling back into their short positions, only for them to eventually next week get them to exit those shorts and get back into long. But the bottom line is the theme that's in play here is banks need to offload their long positions. So that's why you're not seeing any trends being formed on the euro, no strong moves being formed on the euro, because the banks are not in the process of accumulating a position right now. They're just trying to find and create a reason to get retail traders to take off their long positions.
Okay, interesting take.
Mhm.
So Kevin, people that are interested in learning about this, how you
Well,
trade, commitment of traders, best place for them to go.
well, we have a school where we teach supply and demand, and we teach how to trade the markets, looking at the CFTC reports and and reading the news and looking at the sentiment from retail traders, how to put it all together to give you a clear indication or just another tool in your belt to be able to determine what's likely going to happen in the markets. So whiteoakfx.com, my friend.
Okay. So great to talk to you again, Kevin.
Yes, Dale, always a pleasure. Thank you so
You
much
know,
for having me.
I thank you for your patience on all this rescheduling stuff.
Yeah, no
I
worries,
did,
man.
and really hope that you have a great spring trading season. And when we get back together in the summer and take a look at what the banks are doing then, if they're still open.
Yeah, absolutely. Well, happy Easter. All the best to you, okay, my friend?
All right, if they're still open, we'll talk about the
Exactly, yeah.
commercials, right, buddy? Anyway, everyone, Kevin, help me say the last name again.
Arujo.
Arujo, that's nice. And
Yeah.
you could follow him on Twitter at WhiteOakFX and check him out. Commitment of Traders gives you there's a lot of different ways to interpret it and gives you some nice market tells at times. So check out Kevin. So
Thank
happy
you, Dale.
Easter, brother.
You too, my friend. God bless.
All right, so that's a wrap for everyone. I mean, for me, not for everyone, and not for me either. You're welcome, Alexander. You could join the team in looks like 19 minutes for the morning edge. And good luck tomorrow, everyone, on the NFP. And I hope you have a great Passover and a very happy Easter. And if you need one, that your account has a resurrection this April. So don't just count your pips, count your blessings. And I'll see you on Monday. Adios. Thanks again, Kevin. Thank you, Monica. See you, Joe. Bye-bye.